evening to those in other parts of the world. It is my pleasure to continue in this session with Alejandro Werner, a distinguished friend and economist, now the new founding director of the Georgetown Americas Institute, formerly in the IMF, formerly a long and established career in the Mexican government, among other places. So Alejandro, thank you for joining us. So the intention is just we're going to have a conversation about how we're seeing the region economically. And just a reminder, if you have any questions for Alejandro, to put them in the chat box. There's a little box on the lower right-hand side. It's in Portuguese. It's a bit confusing, but it says that you can send a message, and that's where you can put any questions. But with that, let me start. So, maybe we can start more generally. We've had a couple of interesting years with the pandemic, and then the pandemic, and still the pandemic, but a big impact and quite a big crisis already with a lot of problems in Latin America. So as we come to the end of 2021 and maybe, I don't know if the end, but something like that of the pandemic, how are you thinking about the region for next year and the impact of the pandemic and other things?
Thank you, Daniel, for the invitation. And look, a little bit, I can take your question as what's the starting point of Latin America in 2022 and looking forward. I would say that it's not the end of the pandemic, but it's kind of the beginning of the stage in which the pandemic now it becomes a chronic thing. We will continue to get scared by new variants. Countries will have to think about boosters every so often. And eventually, I think therapeutics will become widely available, and hopefully that will be maybe the end of this episode. Latin America emerges from this significant long first stage of the pandemic, having been one of the regions of the world that has been hardest hit, both from a public health perspective, from an economic perspective, and from a social perspective. From a public health perspective, I guess one of the regions of the world with the highest mortality rate. From the economic perspective, with a significant scarring. And what do we mean by scarring? Basically that when you look at GDP expected for 2024 and 2025, and you compare it with the expectation you had for GDP in that year before the pandemic, people, both the IMF, the World Bank, and private sector analysts are expecting GDP in Latin America to be below around 2 or 3 percentage points where we expected GDP to be before the pandemic began. That actually puts Latin America in a position in which, if you look at GDP per capita between 2015 and 2025, it will be almost constant. Basically, Latin America had a decade where it had to absorb two very large shocks. One of them was the decline in the price of commodities starting in 2014, 2015. The other one was the pandemic. And on top of that, Latin America had to go through to manage significant disequilibria and I would say a decent level of social tensions arising in Chile, in Colombia, in Brazil, in Ecuador, etc. So now we have a very important economic gap, as I highlighted, with GDP being significantly below what we thought we were going to be 3 years ago. Secondly, important social gaps that have widened during the pandemic. I mean, the pandemic has hit the poorest sectors of the population the most. So poverty on average will go up. Income inequality will increase as well. And women, youth, etc., will be hardest hit by the pandemic. Third, I think the pandemic has opened up, maybe through the economic and the social channel, the public health channel, the polarization in society and especially in the political system. So we are facing a much more polarized political environment. All of this makes for a very difficult situation in which also you're coming out of the pandemic with also increasing fiscal gaps. Public debt to GDP has increased and public sector deficit, primary deficit have increased as well. So you need to jumpstart your economy in terms of growth. You need to correct public finances. and you need to significantly strengthen your social policies. All of that also in an environment in which your politics have become much more polarized and you're facing a really intense electoral calendar with we're closing 2021 with the second round elections in Chile. And then we have in 2022 elections in Colombia and in Brazil. So I would say a pretty challenging combination. Obviously, the external environment posing, I would say, some opportunities as advanced economies have recovered much faster than what we thought from the pandemic. Commodity prices are supportive for the region, and monetary and financial conditions have been extremely supportive. However, they will begin to tighten before what is optimal for Latin America, and obviously the inflationary shock driven by the supply shocks that have been appearing given the fast recovery from the pandemic is also affecting financial conditions and has driven central banks in the region to act earlier than what would have been appropriate given the stage of the business cycle in Latin America. So I would put, that on the table as an initial statement, and also highlighting two sub-regional issues, the Caribbean being the hardest hit region in the world, given the significant hit to tourism, and Central America showing up, the traditional problems amplified by the pandemic of security, but also of important movement of people towards the US that has become, I think, an important domestic political issue in the United States and an important economic issue in Central America and Mexico.
Excellent. Yeah, I'm not on mute. Excellent. So staying on the general, you mentioned the external environment, right? And even if we don't believe in dependency theory or anything like that, it's looking at the region the past few years, it's hard not to think that when things are good outside, countries do well, and when things are not, countries don't do well, right? And there's differences, but it still seems that the region is very much very vulnerable to this external environment, maybe more than others. So two parts to my question. One is, well, if you think that's true. Second, how do you see, you mentioned it a little bit, but maybe going a little bit more deeper into how you see the external environment playing out in Latin America, particularly the tightening of financial conditions, or if anything else happens. And if you see that some countries have become, have been able to become a little bit more resilient or not.
Yeah, look, you're right. Latin America, it's a region that, due to its low savings rate, due to its low, relatively meager development of the financial system, it has a disproportionate influence of external conditions determining its business cycle. So yeah, when the rest of the world does poorly, Latin America does poorly. When the rest of the world does well, Latin America most of the time does well, but Latin America has managed also to do poorly, even in a world environment in which the world was doing well. So that means that there are some countries that have built up such a large level of vulnerabilities that even in good times we have had problems. I would say, countries have been able to develop significant sources of domestic strength and reduction in vulnerabilities. We have seen throughout the pandemic, in many countries, a very aggressive use of fiscal and monetary policies to minimize the impact on their countries, even excessively going overboard, like in the case of Chile. We have seen very interesting paradoxes, in Latin America. We have seen one, let's say, of the most conservative presidencies rule over maybe the largest emerging market Keynesian stimulus in history. In Chile, we have seen a very significant deployment of fiscal policy, and also a deployment of quasi-fiscal policy through the withdrawals of the pension system, going way beyond what is needed. Now the Central Bank of Chile is saying that, the output gap has been closed, that they're running into a situation of overheating. So in a sense, they went beyond what was needed, but it shows you that, I mean, that economy built significant tools to really play a counter-cyclical role during the pandemic, something similar we saw in Brazil, in Colombia. And then let's say the other side of the LATAM paradox in the pandemic, I mean, Mexico, a left-wing leader actually opting not to implement policies to support the population. And going forward, I think you still see economies with a lot of uncertainty in terms of regulation, in terms of microeconomics, and even in terms of future macro policies. Let's say, I mean, Chile, with a constitutional assembly, with a very polarizing election, but still with a lot of fiscal space, has tools to manage the business cycle relatively well. The same is the case with Peru. Lots of uncertainty, but the government of Peru, I mean, being able to access international capital markets at extremely good rates. And therefore, the work that has been done in the past really allows these countries to weather external and domestic uncertainty. And even, I mean, if you look at the case of Mexico, still with significant fiscal space, and I would say a lot of confidence from the international community on macroeconomic stability. In Mexico, the government has been truly committed to that. The uncertainty rests much more with respect to potential growth, investment, etc. So from a short-term perspective, I would say still a lot of space to manage a complex situation coming from outside. And that's what where we come. I mean, look, I mean, from the monetary policy side, a little bit of an unfortunate coincidence that will be hit in Latin America. First, I mean, this unforeseen in terms of magnitude increase in inflation. I mean, everybody was expecting an increase in inflation worldwide coming from the reopening of the economy, basically because of the low base of comparison of the year 2020. Also, some movements in exchange rate and some movements in prices, but this very large spike of inflation in advanced economies and in emerging markets coming from manufacturing on top of what was expected in commodities, etc., I mean, has led many central banks in Latin America maybe to an earlier or stronger withdrawal of monetary stimulus. And then maybe when we see that this was transitory, maybe some of the central banks will be handcuffed in their ability to reduce rates because the US will start to raise rates. And although maybe the optimal monetary policy will be one in which they have some space to reduce rates, or even they will have some space to maintain them constant, maybe market volatility, etc., pushes them to be more hawkish than what the domestic situation will warrant. So that's a challenge. I think the credibility of central banks so far in Latin America has been significantly maintained. And therefore, you do have important buffers. You have a lot of international reserves. You have relatively good structures of public debt already, with concerns, for example, in the case of Brazil, of the fast shortening of duration, etc. But I would say you have buffers with significant levels of international reserve, contingent credit lines, good debt structure, and in some cases, as it's the case of Brazil, a very strong domestic investor base that will allow these countries to manage this complex situation in international capital markets if there's, let's say, an event in which the market perceives that the Federal Reserve or the ECB are behind the curve, and therefore we see a very violent repricing of long-term interest rates affecting capital flows to emerging markets.
So following up on that, on inflation, obviously there's been this big debate here in the US and everywhere, so if it's transitory or not, and how transitory it is, and it's been more transitory than it seems like it was, right? But I think the consensus is still that it's transitory. I mean, how do you see that both in the US and in Latin America? And you've mentioned a little bit the response of central banks, but my question then is, how much can central banks really do, or if there are other ways? And particularly given what you described, and it's been very clear, this very difficult social and political situation. I mean, at which point do you fear inflation starts to become either a problem for monetary policy, which we haven't really seen, right? I mean, a politicization of monetary policy like in Turkey, or just a more serious political problem that then obviously has an impact on growth.
You're right. I mean, still, inflation in the advanced economies and in emerging markets, in most of them, is more a consequence of factors that cannot be affected by monetary policy. So let's get away with this transitory adjective and say, I mean, these are things that, I mean, monetary policy will not solve the chip shortage to trigger a significant increase in the supply of automobiles and an aggressive reduction in the price of used cars. However, I mean, there is this issue, especially in countries in which, and that is why the US is not normalizing its monetary policy and Latin America is starting to normalize its monetary policy, because the anchoring of medium-term inflation expectation is much stronger in advanced economies. The monetary authorities feel much more confident that you can live in an environment in which inflation expectations for 2024 are anchored at 2%, and your current inflation is around 5%. However, I think in Latin America, we feel that we cannot live through a very long period of this disconnect between current inflation and medium-term inflation expectations, and therefore you need to signal that the monetary authority is watchful and is taking action so that that inflation process will not get entrenched. In addition to that, I would say it is true that the real reasons to tighten monetary policy in some countries, like if you take the case of Chile, 6 months ago or 8 months ago, nobody expected the output gap to be closed. So in a way, I mean, there have been real factors that also move the central bank to act. Something similar has happened in Brazil. The real economy has done better cumulative in 2020 and 21 than expected, let's say 12 months ago or 8 months ago. And the exchange rate also started moving pretty aggressively this year. And in the case of Brazil also, you have, I think, significant fears of fiscal dominance, given, let's say, the still lingering doubts on how Brazil is going to manage its increasing debt to GDP ratio and move this towards stability. So in that sense, I think in the case of Brazil, it was very important for the central bank to act, both because the exchange rate movements that were feeding into inflation, credibility of the independence of the central bank and fiscal dominance was affecting the inflation formation process, and then the supply shock. In the case of Chile, I think there were real motives behind the very fast recovery of the economy in terms of the spike, the supply side driven spike in inflation. And I would say the case of Mexico, it's a little bit more questionable, given that GDP has not recovered as fast, given the sharp drop in 2020. I mean, they're not back to 2019 levels. The exchange rate has not moved that much. And fiscal policy is actually super supportive of medium-term inflation expectations because, I mean, Mexico has been one of the most conservative countries in the world with respect to their fiscal expansion because of COVID. So I think central banks will act appropriately. They will maintain a hawkish bias throughout this cycle, given the uncertainty, given the political uncertainty that this year will entail, given the election process that we have, and the political uncertainty that will remain post-elections in the case of Chile. And then we might see, if we run through windows of financial volatility associated with, let's call it the normalization of interest rates process in the US that triggers significant capital outflows, I would say we might end up observing more activity coming from the exchange rate intervention side. That's an instrument that has been used in the past. During this cycle, the central banks of Latin America have not used it, but in a way, it's an instrument that can complement the interest rate and can address the exchange rate market directly, especially in a period of high volatility. So we might end up seeing the FX swaps in Brazil and Mexico, let's say 12-month programs where the central banks guarantee an additional supply of foreign currency assets to really take some of the pressure out and therefore complement monetary policy interest rate actions. That is something that I think might be present in the future in Latin America again to help manage this process. And obviously people will be looking towards fiscal commitments. How is Brazil going to square the circle on fiscal policy? In Chile, how this political tension between significant demands for a better social economic equilibrium with much less market and more government in terms of social insurance and instead of education and health coverage, how that is going to be square with the sustainability of public finances and also a very market-friendly regulatory environment. No? So I think those things will continue to weigh on uncertainty and give us a relatively low growth environment in Latin America as we exit the pandemic. And even if we have tailwinds coming from commodities, they will not be as strong as they were in the past.
Excellent. I have two more general questions before we go more specific into the countries. But one is, you were at the center of a lot of in a very relevant place in the IMF, looking at all the countries throughout the pandemic. Right? And you've mentioned the different extremes. If you had to look now and say, at one extreme, those, you put like on the spectrum, the countries or governments that did things correctly, and at the other ones that did things less correctly or incorrectly. I mean, which do you think was a country that best managed this shock, and which one, the one that worst managed the shock? Because at some point it seems like ones, and maybe now it's others, right?
You're right. And given that this pandemic cycle has not finished yet, I mean, it's puzzling that some of the countries that manage health policy in a way that we thought was correct at the beginning of the pandemic, with pretty good results in terms of low mortality rates, at the end of the day ended up catching up in terms of mortality rates with the rest of the region, or with the median of the region, because it was economically, politically, socially very hard to maintain those levels of social distancing constraints, etc., for such a long period of time. And then when you start opening up, you had a very vulnerable population, and you have significant increases. So I would say, look, obviously countries that completely minimize the public health risks that the pandemic entailed, I would say, obviously did it wrong. So however, I think collectively, maybe we send wrong signals. At the beginning, if my memory doesn't play games with me, I think most people kind of thought that with a 12-week, 18 weeks, put the number that you want, strong lockdown, the virus was going to go away. Nobody was saying, look, we have to prepare for a 12. This is waiting for the vaccine. This is the name of the game. We have to minimize the death rate before the vaccine arrives. The vaccine will arrive in a period of time in which this strategy makes sense. Obviously, this with the benefit of hindsight, but definitely, not a lot of public policy makers said this is an 18-month. We have to design like a 12 to 18-month lockdown thing. So which is a lockdown that we can tolerate for 18 months or 12 months? This is not a 6-week thing in which we crush the virus. And there was a lot of things saying, look, we have to flatten the curve, and then we have to bring R below 1. And once that R is below 1, the virus disappears. So I think thinking for the future, I mean, we have to think on how do we develop both public health policies, social distancing policies, and economic policies to last for a long period of time until the medical solution is in place. Secondly, I would say that definitely, again, I would not say who did it right and who did it wrong because there are too many dimensions, but definitely in the two extremes, Chile and Mexico, I think are at the two extremes of these things. Mexico had fiscal space and could have done more. I think Chile overdid it and also affected structural strengths of the Chilean economy, and when there was no need to do that. I'm totally for risking some structural aspects to manage a public health crisis that nobody thought about. Because, however, Chile did not need to undermine its pension system to support their population. They could have done more from the public balance sheet without undermining the pension system. So I think in the case of Chile, you saw both excessive fiscal, quasi-fiscal push, and also excessive structural damage to a system that I think everybody says that was could be improved, but was a pretty good system for the Chilean economy. And I think in the case of Mexico, Mexico will end up with significant scarring. I mean, Mexico is one of the countries that will end up with a GDP per capita at the end of 2021 way below 2019. Poverty increases would be higher than in other countries, and a lot of those things could have been avoided. Mexico should have been one of the countries that benefit the most from the US fiscal stimulus, from remittances, from the fast recovery on the US economy. So in that sense, I mean, vis-a-vis the counterfactual of where would Mexico would have been with a fiscal stimulus of 5 percentage points of GDP in 2020 and 2021, I think Mexico would have fared much, much better. And that's, I think, a problem. So you have a lot of culprits when you say, I mean, governments that kind of denied a little bit the strength and the seriousness of the pandemic. And I think you also have the countries in the extreme that I think, they exaggerated both the conservatism nature of sending a signal to the markets by being extremely orthodox in the fiscal policy, or using too much of the fiscal space when they could have done something that was much more targeted, that also was much more protective of the structural strengths of their economy. And I think that is where you find, in my opinion, the biggest policy mistakes.
Excellent. So staying with Mexico then, the midterm elections have passed. Obviously, Mexico is in better fiscal shape than the rest, but as you said, from the growth perspective, that doesn't still look like it's recovering, right? I mean, how are you thinking about Mexico now? We know that we have another 3 years of the Lopez, well, a bit less than 3 years of the Lopez administration, and some decisions recently that have at least put some heightened uncertainty on where it's going, further centralization of decision making. So how do you see the economy and all the different trade-offs evolving in Mexico?
Look, I continue to see the Mexican economy, and obviously the actions during the pandemic reinforce that, like an economy in which I think the fears that some people have that the López Obrador government was going to risk a macroeconomic or financial crisis, I think that's something that has been really managed seriously during this government. They have been very serious in terms of their fiscal conservatism, and they have been, I would say, respectful of the independence of monetary policy, and also they have not generate significant uncertainty on the financial system. Even financial sector reforms, let's say pension reform, etc., have been in the direction of what has been, let's say, the tradition in the past 12 years. So I would say when you look at the financial fiscal macro compound, I think there's a lot of certainty that you will continue to see a fiscal policy that is geared towards sustainability. And I think you will still see a monetary policy that follows an inflation targeting model with a significantly low level of intervention or influence by the fiscal authority, the government. I think the changes at the central bank are not the kind of changes that will give you automatic certainty and security, like because the new governor has not been involved in financial matters and monetary policy matters. And in that sense, she will have to prove her credentials in this arena. I mean, as everybody knows and everybody has seen the CV, etc. You have let's say, a technician within the government, more associated with expenditure issues and also financial issues from the point of view of managing budgets and managing the finances of entities like the metro, etc. Less so managing interactions with financial markets. And in that sense, she will have to prove herself vis-a-vis the markets to establish her credibility. And this transition can be tricky, but we have seen it happen in many other cases. So that's work in progress. And there's some operational risks there that you didn't have with Alejandro Diaz de Leon. And I think a lot of people thought that we didn't have with Arturo Herrera because we have seen him at the helm of the finance ministry. So that's an additional risk. But within this scenario, I think of a well-established track record of trying to avoid any type of slippage on the macro issues. I think in that sense, President López Obrador has been very clear, and these things come from him. I mean, now you're going through your third finance minister. You cannot say, this was Carlos Ursúa, this was Arturo Herrera, this is Rogelio Ramírez de Lau. This is the president who really thinks that this has to be done this way. However, on the other side, on the competitiveness, on the investment side, on the regulatory side, and on the strength of institutions, I think that's where you see a lot of the problems in Mexico that will continue to weigh and even more strongly on investment, on job creation, and on growth. I mean, obviously, the current proposal for constitutional reform in the electricity sector, it's a problem that regardless of whether it's passed or it is not passed, it tells you that this is a government that really wants to put the public sector company at the center of the system, that really will not want to make things easier for the private sector operating in this sector. And this is a reflection of their view on the energy sector, on infrastructure, and on many other sectors of the economy that, let's call it, this regulatory uncertainty will significantly weigh on investment, and even more so in the second half of the administration, as the government seems to be doubling down a little bit on some of these issues. And also, I think, on institutional strength. I mean, if you send a signal that you want to disappear the regulatory commissions in the energy sector, it also sends a signal that goes beyond energy, that sends a signal that your view of the state, it's a state in which the government has a much stronger power to determine economic activity, and that can use those powers in a more discretionary way vis-a-vis the private sector. So in that sense, you can think that other regulatory commissions have not been touched, but the logic is a logic in which you would like to see their weight diminish, and therefore uncertainty in other sectors also increases. To me, that's the biggest risk, and that will be reflected in a much lower potential GDP growth rate in the case of Mexico, and eventually in financial problems. I mean, if this thing extends beyond 3 years, it is very hard to have a country that will be able to sustain financial stability with a declining growth rate, with all the social problems that Mexico has to deal with. And that's a little bit my medium-term concern in Mexico. Even in the short run, we can be pleasantly surprised with growth, as in 2022, we have a full year of a vaccinated country, a reopening, maybe no problems in the automobile sector like we had this year, a full 12 months of the tourist sector and the service sector reopening. Maybe we have positive surprises there. But beyond that, I think we will see a significantly low growth, and eventually that growth having spillovers into, let's say, the financial stability that we have gotten accustomed to in the case of Mexico.
So you do think that this is going to have a longer-term structural impact on Mexico growth, that it's not just the policies of one government that then, you know, they go away, then it change. You're more concerned about that?
Well, I think what comes after this government, let's say, regardless who comes after this government, first, it will be very hard to revert a lot of these things. The next president of Mexico will face, I would say, a much more fragmented political system. That person might also face still an active group of people pushing for the policies of President López Obrador. So undoing them will not be as easy. And in that sense, I think things might improve, but it will not be as simple as just to turn on a button and go back to the reconstruction of institutions, the reshaping of regulation, etc., because then these changes create their own lobbies that will try to protect the status quo, and then it will be hard to change. And then you might have a new president that also campaigns on the back of President López Obrador. And that implies, at the end of the day, making it harder to change some of the things that he did. No, so yeah, I think depending on who's the next president, you might have positive surprises or negative surprises. But I think you can think of an extended period of uncertainty that goes a little bit beyond 2024.
And what about Brazil? I mean, obviously, it's going into a very big election. They did a big fiscal stimulus. Seems like we were listening before, the fiscal anchor is gone. I mean, how are you thinking about this next year and also longer term Brazil?
Look, I think in the next year, I mean, there will be a lot of uncertainty. You know, Brazil will have to deal with inflationary shock, with the fiscal uncertainty, and with a very polarized election. I think people are seeing that the possibility of zero or even negative growth in Brazil continues to go up, because you will need a policy tightening. If the fiscal doesn't do it, then the monetary will have to do it twice as fast, and therefore you will find yourself with, let's say, with a contractionary policy mix, with a lot of uncertainty coming from the election. Paradoxically, maybe Lula will be providing the stabilizing role as he moves to, or tries to move to, the center to gain that vote. And on the other hand, the government will try to push a little bit the limits of their fiscal policy space, also to try to maintain the support that they have gotten through, let's say, their expansionary fiscal policy. But I think at the end, you will have the combination of uncertainty, contractionary policies, etc., leading to a pretty difficult year in 2022 in Brazil. And I think the medium term, I mean, the Brazilian economy, a little bit, the commodity boom, and then the political problems out of the Dilma government and into the Temer government also made it hard for Brazil to move faster in terms of opening up its economy. It's one of the closest economies in the world. And I think it will be very hard to have a sustainable decade of high growth in Brazil if you don't aggressively reform and open up the economy. And well, maybe the next government will have the space to do it, but I think, I mean, now we're going into the 6th year, 2 of the Temer administration, 4 of the Bolsonaro administration, in which I mean, the implementation of a reform and opening agenda has been really low. No, the only thing we have to show for it is the expenditure ceiling, that it's more a declaration of intention, because it doesn't tell you, and it's gone, and it doesn't tell you how you're going to achieve it. And the pension reform, that it's a real reform that is hard to do in Latin America, and I think we have to recognize that, but it is not enough, neither to stabilize debt to GDP, nor to generate a growth rate around 4% in the Brazilian economy. So I think it will be challenging to put in place a program that will achieve that. And we will see more muddling through in the case of Brazil with fiscal patches and with some small reforms that generate some kind of expectations that growth rate will pick up a little bit. So I don't see, let's say, a fiscal crisis, but I do see this muddling through continuing for a couple of years.
Excellent. And so moving south to one of thorniest ones, how are you seeing Argentina? You know, there's obviously all the macroeconomic problems, the question of an IMF agreement, and you know, and a lot of complicated years before us. And so how are you thinking about the Argentine story?
Yeah, look, I mean, it is clear that Argentina, let's say, due to the pandemic, maybe due to the reading of the domestic political situation, etc., kind of stretch out the solution of the, or at least their design of the solution to the deep-rooted problems that the Argentinian economy has. And obviously now after the election, this has been, I mean, this disequilibrium again are being manifested in their FX market. And I think the pressure to come up with a much more coherent medium-term program are there. The president has announced that he will do that. But still, I mean, we haven't heard from almost 2 years into this government a clear outline of what a program to solve the historical deep-rooted problems of the Argentinian economy, in which you have, I would say, a very large public sector that leads to a tax system that ends up being unpredictable, uncertain, and hinders investment and medium-term growth, and also pushes the government to silently tax through regulation the private sector, no, by imposing export limits to key sectors of the economy, to imposing other type of controls that limit your capacity to expand your firms, etc. All of that maybe to achieve some respite to the median voter. And in that sense, you really need a coherent medium-term program that at least give you the main guidelines of how the government thinks they can achieve an economy that grows sustainably at 4% for the next 10 years. That is going to allow you to put back your public finances in order. And eventually it will allow you to reopen the balance of payment, both the current account and the capital account, to a significant degree that investors will feel fine in bringing their money, both domestic and foreign investors, to Argentina. I'm not saying that you have to go back to a freely open capital account, but you have to have a significant amount of openness in your capital account in which people feel that they can try new businesses in Argentina. They don't work, they can leave Argentina. If they work, they stay and they reinvest, and they can take their dividends out, etc. So I think hopefully what we will see, and I would say that should be independent of an IMF program, is that the government has a more a complete program that tells investors, the market, society as a whole, how are they planning to solve these inconsistencies at the same time that they provide, let's say, a system that continues to deliver on the social objectives that the government has. It seems that the government is working on that. At the same time, they're working with the IMF to try to close a deal so that, let's say, the reprofiling of their debt with the IMF is done within the context of a program, and Argentina doesn't need to run into arrears with a fund. So all of that is taking place as we speak, and hopefully we will see that. No, and obviously, and that's more, let's say, on your side of the screen than mine. But then how do you square all this with the politics? How do you get the political system in Argentina to support or at least allow this program to be implemented, again, with a very short horizon of 2 years until the next election, and maybe 12 months until the next campaign, or 15 months until the next campaign starts? I think it's a very, very complex task, but at sometimes in our country's history, that's why you get elected, no? And eventually you have to put these things in the table, and hopefully in the next few months we will see a much more concrete program that allows Argentina to start getting out of this problem that goes beyond Fernandez, Macri, Cristina. I mean, this is 30 years of a crisis, slow medium-term growth, and maybe some periods of high growth on the back of coming out of very deep crises, and also a relatively good international environment. But besides that, I mean, it's a very flat GDP growth path for Argentina in the last 30 years.
And how about Colombia? I mean, because Colombia is one where it's been a very good management for the most part, but the social demands are substantial, the fiscal problems are there, and then there's elections. How concerned are you about Colombia next year?
I am concerned. I mean, definitely, I think the peace process in Colombia, it's a huge accomplishment for Colombia, but I think it has also significantly widened the political possibilities in Colombia. It has made feasible for people to vote for more left-wing candidates than in the past, when left-wing was associated with terrorism and guerrillas. And that, I think, has shifted the political economy to the left, because also the right-wing candidates have to be less conservative to cater to the median voter that now has shifted also to the left. And it has also opened up the possibility of having a more, let's say, a government that might be willing to run more risks in terms of achieving social objectives faster at the risk of financial instability. And that's what we're facing now. I mean, on the back of President Duque's response to the pandemic, public finances have deteriorated. Colombia got a downgrade in their credit rating. I think the response was a pretty, let's say, a textbook case to the pandemic, but maybe within another political context, maybe the Colombian government would have chosen to be a little bit more prudent in their fiscal response. They took that risk, and now we have a situation in which Colombia is financially and fiscally weaker, On the other hand, you have the possibility of Petro becoming president and the uncertainty that this entails. I mean, you might end up having one of these guys becoming president and even launching an agenda that moves on the dimension of being more aggressive on the social aspects, but at the same time maintains a fiscal sustainability. And that could be a huge plus. But there's always a risk, and we have seen it more often than not, that at the end of the day, they end up depleting buffers. And then when the time for correction comes, it's too late, it is postponed, and it's too small, the response that some of these governments imply. And I think those are the risks for Colombia. In the short term, their economy is doing better than expected. If that's the case, hopefully both, especially Petro, can move a little bit more to the center. And also politically, you might have, let's say, an establishment candidate coming out before the first round, strengthen, and that maybe diminish a little bit the uncertainty that we are facing in Colombia. No, but in a way, look, I mean, if you compare Colombia with eventually López Obrador coming to power in Mexico, obviously Petro, if he becomes president, will come to power with a much more shaky fiscal and financial situation, and that might put some limits of what he can do, and maybe he decides to tackle those issues head on at the beginning, and then move to the social agenda a little bit further during his period. I mean, who knows? But obviously the risk is there, and it has two fronts. I mean, the financial and fiscal strength of the Colombian economy has weakened, and on the other hand, I do think that we have seen a structural change in Colombian politics associated with the peace process, that it has made this country more mature in that sense, but it also entails a little bit more risks.
Excellent. And then my final question, going back to the regional and thinking that you've been, you were an academic, you were in high positions in one country's government, then you had the more regional view. I have the sense that for the past 30 years, there hasn't really been much discussion in Latin America about reforms, right? Real reforms beyond macro stability, right? I mean, and reforms about like productivity enhancing, channeling growth, etc. So my first question, so three parts. The first one is, do you agree with this? Do you think that there is more of a discussion of reforms? Then, if there is or if there isn't, what do you think these reforms should be, right? I mean, because one thing is just stabilizing the fiscal accounts, etc., which is hard enough, right? But obviously, more needs to be done, right? And given that experience, I mean, what is you can think of the textbook reforms, but then all of these have to be politically feasible, right? I mean, so what reforms do you think are politically feasible in Latin America?
Well, I mean, that's
really tough.
very. Look, first I would say that, I mean, the answer to your question is very country specific. In a way, I mean, you have let's say the Mercosur countries, in which, I mean, I would say that opening up their economies to a much more competition from outside should be key. And that would really generate a degree of competition and reduction in market power by some domestic firms, etc. That would be a very important reform. You can tell me, well, Mexico did that and it didn't grow, and you're right. I mean, but I do think that in the case of Mexico, NAFTA did generate significant benefits socially, regionally, etc., that we can point to, but still it didn't transform the country. But I would say in those countries, I would say trade reform is key. I think competition reform throughout the region should be very important. I think if you look at the service sector, the degree of market power by key players is very, very large. And I think important strengthening of antitrust legislation could be very, very important. I think, look, in many countries, judicial reform is key. I mean, the uncertainty that an unpredictable judicial system generates in Latin America and the lack of a strong rule of law generates, it's very, very important. And I would say education, education, R&D, etc. Look, we keep on talking in Latin America about fiscal reform, pension reforms, monetary policy, while the world is thinking about digitalization, self-driving cars, artificial intelligence. We are significantly lagging behind in many of those things, and we're no longer a region that people look to as a growth story. And in that sense, look, I mean, you have to fix, you have to have your internal accounts in order, etc. But then you need to move to structural reforms that really push towards making the economies in Latin America much more competitive, that increase the investment rate and that increase productivity. And I would say that goes through education, goes through opening up spaces for the private sector, and goes through spending money in research and development. That are all things that we have not done. And what is feasible? I mean, you have to I mean, that's your job. What would be politically feasible? But political feasibility is also something that, I mean, that's why politicians get paid for. No, they have to create the space to implement what they think their countries need, and that is called political leadership, and that it's called political skills. And yeah, I mean, it will be a very difficult environment, and Latin America will need very skillful politicians, but also politicians that want to do what the country needs to do, because if not, I mean, I think the stakes are very, very high, and we will see, and I think it's the most likely scenario for Latin America. We will continue to see muddle through with more vulnerabilities, and therefore we will see more crises in the region in the next decade.
Excellent. Well, thank you very much, Alejandro, for your time, for your insights as always, and thank you very much for joining our summit. And for everyone else, stay tuned. We're going to have the next panel focusing on the economic and market outlook for Latin America. Thank you very much.
Thanks. Bye-bye. Thanks for the invitation.